Now let us do one more exercise. This time what we do, we will take HTF as weekly, ITF as daily, and LTF as 75 minutes, because we are reducing one time frame below. 75 minutes, one time frame higher is daily. For daily, one time frame higher is weekly. So now I am selecting another stock, Bajaj Finance. This is a weekly. Let us go to, I am selecting, now currently it is in daily time frame. Let me click on W, weekly time frame. In case if you didn't create shortcuts, you just get into these time frames. From there you can select 1 week. See, now the time frame is changed to W. The selected time frame will be highlighted with blue color in this toolbar. I mean time frame toolbar. Okay, let me remove. See, from the current time frame, you need to go back and identify which is the most recent zone is available. So that way we identified there is a rally candle, we have a base candle, and again there is a rally candle. And which zone it is? This is weekly zone, weekly demand zone. So I am selecting the shortcut WDZ, weekly demand zone. Now the color is as per weekly demand zone settings. Okay, do we have any supply zone from the current time frame? Immediately we have identified we have a drop, two base candles drop. So let us draw the weekly supply zone. I'm changing the color to weekly supply zone, WASZ settings. So that means we are expecting the price movement should be between these two zones. So let us draw the range of this particular zone. How do you draw from distal line of this weekly demand zone and the distal line of this weekly supply zone? So we have info line. From this distal line of this weekly demand zone, I am drawing till the distal line of this weekly supply zone. That is a D2D range, distal line to distal line range. So what is the total range value? The total range value is 1507, which is equivalent to 24%, this entire range value. From this, starting from this distal line of the demand zone, the total value is 24.58%. So total, it is a total number of points, that is 1507. So in the calculator, what is it? 1507 divided by 3. You got 502.33 points. So let me save them in the memory, calculator memory, by clicking M+. So in the memory, this value is saved. Okay, what is this distal line value? So the low of this base candle, the demand zone base candle. What is the low? 6129.90. 6129.90. This is the distal line of this demand zone. From here, you need to add the 502 or 503 points we saved. So plus MR, memory release, we got 502.33. So what is the value we got? 6632. So around 6632, we need to draw a horizontal line. 663430. Okay, around 6634, approximately I'm writing 6634. So this is called low on the curve, that is buyer's area. Let me add a text. Buyer's location. Instead of calling buyer's area, let us call buyer's location because we are using the word location. So what is the technical name for this? Low on curve. Shortcut is LOC. We can say this entire area is buyer's location. Okay, from here we will add again another 502 points. So plus again memory release 502, that equals to 7134. Let us draw one more horizontal line at 7134 or 7135, either one. Here. So this area is equilibrium. And above that we have seller's location. This is seller's location. And what is the technical name we are calling for seller's location? High on the curve, short name HOC. See, for your practice purpose, I am repeating these points again and again so that you get some comfort. Later on, you feel all these names are very easy for you to remember. So now we have three parts. One is buyer's location, we have equilibrium, and also we have seller's location. Now currently where the prices are there? Look into the recent candle. At present the prices are in the seller's location. Okay, fine. Then what about the trend? So to identify the trend, we have to go one time frame lower. Because our HTF is weekly time frame, one time frame below is daily. So daily time frame should be used for identifying the trend. So I'm changing the time frame to daily, D. I'm clicking D. So currently what is the trend of this stock? See, the prices are going down, 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 down. Has it violated any supply zones? No, not yet. Because this is the first supply zone we identified here. But before that, has it violated the demand zones? While prices are going? Yes, several demand zones it violated. This is one demand zone. This is a daily demand zone, DDZ. And any other demand zones it is violated? Yes, here also we have, this is LOTL concept. Both these demand zones together. Okay, below that, is there any other demand zone is there? Yes, we have one more. We have a leg candle. This is a ERC candle because the range is high. So by violating these two demand zones, LOTL demand zones, now the trend from, say, let us say it is uptrend. From uptrend, it's come down to sideways. Now, even by violating this demand zone, now trend is changed to downtrend. Now all the demand zones are violated. Now to change the trend from downtrend to one of the existing supply should be violated. But that is not happened, not yet happened. That is the reason why still the trend of this particular stock is a downtrend. Okay, now let us identify the most recent demand and supply zones close to the current price. This is the current price. If you go back from here, here we are able to identify a demand zone. Let us draw the demand zone. See here, one typical situation. This demand zone is there exactly in between equilibrium and high on the curve. It is there exactly in the border. So where you have to give? If it is close to, at least if this zone is there overlapped with equilibrium, make it inside the equilibrium. It's part of the equilibrium, nothing wrong. Similarly, if it is overlapped, any zone is overlapped between buyer's area and equilibrium, consider that is part of the equilibrium. Okay, now is there any supply zone? Yes, there is a supply zone. We have a rally, we have a base candle. Now this is a daily supply zone. Let us apply the template, DSZ. So now this supply zone is inside the weekly supply zone. Can we say this is LOTL? Is it level on the top of the level? No, you cannot. LOTL concept should be used within the same time frame. If two zones are overlapped with each other on the same time frame, then you can call it as LOTL. But here one zone is daily time frame zone and another zone is weekly time frame zone. When such kind of zones are overlapped, we have a separate concept called zone confluence that we will discuss later. That concept is useful for the risk management point of view. I already indicated by end of this second phase of the training, you will be learning risk management. So after completing all these concepts like zone confluence, then we will get into the risk management. But time being, remember this is not LOTL. This concept is zone confluence. We will discuss this concept in detail later. Okay, now prices are will be moving between these two zones. Maybe we are 2 days late. If you would have analyzed 2 days back, this would have been a good entry for taking the short trade. Why it is a good entry? Reason number one, this zone is in seller's location. And reason number two is the trend is a downtrend. So trend is in our favor, location is also in our favor. So this could have been a short trade. Okay. Now what is the entry? What is the target? I think something wrong we have done. I don't know how many of you noticed. We will take our entry not on the daily time frame. This is intermediate time frame. Intermediate time frame should be used for identifying the trend, not for taking the entry. That's why be careful. Sometimes we make this kind of mistakes. You have to go one more time frame below and then you have to take your trade. So what is one more time frame below? 75 minutes time frame. So now I am changing the time frame from daily to 75 minutes. Now here we identified a zone. We have a, what kind of candle it is? With the gap. Remember, this is not a drop candle. Previously in the practical session, the first practical session, I explained, not in the first practical, in the first phase of the training program practical session. I explained a concept called hidden body and hidden zones. So there is a gap. Because there is a huge gap, if you add the hidden body, this candle is looking like a rally candle. So it is going to be a rally base drop. So you have to draw a zone like this and change this color to 75 minutes color. 75 minutes supply zone. So this zone is a 75 minutes supply zone. Now where is the demand zone? We have a demand zone. Something like this. See, already price has entered, it reached the target till this demand zone. And those who wants to minimize the risk, you can take type 2 entry like this. Even anybody might have felt the risk is high and adjusted to type 3. Type 3 entry is also successful for this supply zone. See how much reward they would have got. They would have got a very good reward, but risk is minimized here. But the ideal choice most of the time we take type 2 entry. We go for type 3 only when we feel this risk is very high. So this is the stock have even supported the type 3 entry and finally reached the target. So is it clear? Is this concept? Now we have to calculate what is the risk, what is the reward. Because this is in the supply sellers area, for this particular stock, we should plan only short trades. So what is the risk? What is the reward? What is the entry? Entry is this type 2 proximal entry. This is our entry and this is our target. So let us identify our target and risk with the help of info line. So 135 rupees is our target. That is expected profit is 135 rupees. So what is the expected risk? Let us draw. So what is the expected risk? 59 rupee, 85 paisa is expected risk. So that means close to 60 rupees. And reward is 135.45. So what is the risk reward? 135.45 divided by 59.85. So 2.26%. So RR is not very good. When RR is not good, what you do? You will try to reduce the risk. So instead of type 2, you go for type 3. The moment you reduce the risk, what happens? Your reward will be improved and risk will be reduced. So let us check. What is the new risk and what is the new reward? So this is our new reward and this is our new risk. What is new reward? 154.35. 154.35 divided by, what is the risk? 43.05. Now you got 3.5 reward, 1:3.5, which is excellent. Anything above 1:3. So how we managed the risk? Just minimize by changing the proximal entry. Now we have gone for proximal type 3 entry. Why we have gone proximal type 3 entry? Because the risk is high. But if you go to proximal type 3, what could be the problem? There are higher chances of missing the trade. But in this example, we didn't miss the trade. Because prices entered, we got the trade. And how much profit we would have got? We would have got 154 rupees on each share. If you would have gone for a short trade based on the F&O trades, either futures or options, your profit margin will be depending. And it is a successful trade. How it is successful? Because the location is in our favor and trend is also in our favor. The location is seller's area and the trend is downtrend. With the downtrend in seller's area, if our zone is there, that is an excellent. And moreover, it is a short trade. Because seller's area, always we go for short trades. And has it reached the target? Yes, it is reached. Clearly we are seeing this. So that is the reason why understanding why location is important and trend is important. Identifying location and identifying the trend. Basically, these concepts are trying to increase the probability of success for the trade. The trades which are supported by both location and trend will be having higher success rate. Further, we are adding more success, higher probability by introducing one more parameter, direction, that you will be learning later. Why again and again I am telling about direction? Because I want to register in your mind, that is also a very important concept. And many of the people who learn supply demand zone theory, they might not have learned about direction, price direction. Maybe few people might have learned, but most of the people might not have learned that price direction. So to make you understand its importance, again and again I am talking about direction, even though I am not teaching direction in this practical session. In the upcoming lessons, we will discuss in detail, but I already gave you an overview in the theory session. But we need to further discuss more scenarios in the theoretical part about the direction. After that, we will see the practicals. By the time you get comfortness about the location and trend. So again, before move on to the next example, third and final example, let me summarize. Location is used in the higher time frame. Another name for the location is curve. Curve or location, both are same. So we will be using higher time frame. And trend we will be identifying in the intermediate time frame, that is ITF. Higher time frame is HTF, intermediate time frame is ITF. And the third one is the actual entry, target and stop loss we will be identifying in the lower time frames. How we will identify in lower time frame? By drawing demand and supply zones at the lower time frame. Do demand and supply zones are required in the intermediate time frame? Not required for time being. I am saying time being. But for these two concepts, drawing demand and supply zones in the intermediate time frame is not required. At the time of learning direction, again we will draw demand and supply zones even in the intermediate time frame. Time being, ITF is used only for trend calculations, not for identifying demand and supply zones. Time being. Okay, what about HTF? HTF we will be drawing demand and supply zones. What is the purpose of drawing demand and supply zones? For identifying the location. Later on you will be learning same demand and supply zones for identifying direction also. But as per the current discussion, HTF time frame, higher time frame is used for identifying the location by drawing higher time frame demand zone and higher time frame supply zone. That is point number 1. Point number 2, intermediate time frame, that is ITF. In ITF time frame, we will not be using demand and supply zones for time being. We will be using only for trend calculations. And the third one is lower time frame, LTF. And lower time frame LTF is used again for identifying demand and supply zones. But these demand and supply zones are used for identifying your entry, your stop loss, and your target. Hope this is clear for everybody. How we are going to use all these three time frames together. Now remember this summary, whatever I explained. Now apply the same for the next example. So by end of the third example, I hope you people will be getting the maximum clarity.